10 reasons to buy physical silver before it's too late. Inelastic industrial demand. Along with being a precious metal sought by investors, silver is also a key industrial commodity that is irreplaceable in a number of key industries, such as electronics and energy production. Many products in your day-to-day life, including the computer or smartphone you're likely watching this video on, would be impossible to make without silver due to its unique properties, including being one of the most electrically conductive metals. Big tech and industrial producers need silver to make their products, and if the price rises, demand for it likely won't vanish. This is because the amount of silver required overall is enormous, but the amount of silver needed in each product itself is relatively small. Imagine a $1,000 phone that currently needs $1 worth of silver to be produced. If silver were to increase in price by 10 times and then a phone needed $10 worth of silver, it's unlikely there would be less demand for the phone at $1,010 than there was at $1,000. As a result, this key industrial demand is very inelastic, meaning the demand does not diminish as the price rises. Unprofitable to recycle. Now that you've realized there might be valuable silver in your old PC or phone, you might be wondering why we don't recycle the silver that currently exists in the products we already have. This may seem like an interesting idea, but at the current price levels, it's a no-go when it comes to recovering the small amounts of silver from devices like electronics. The amount of silver in each piece of consumer electronics is too small to justify the cost of the process needed to leach all the small amounts of silver out of the boards and processors they are embedded in. Perhaps once the price level has dramatically risen, we will be digging through old landfills to find this future buried treasure. Unallocated silver accounts. Unallocated silver accounts are products offered by various companies that deal in precious metals. They allow people to place money into accounts to gain price exposure to silver, without any particular silver bar being reserved for the individual investor in their account. In theory, this allows companies to use the cash to float purchases of incoming silver as it goes through the various stages of refining. As silver supplies have tightened due to the increasing demand and supply line disruptions caused by various government shutdown orders, these accounts have come under greater scrutiny for possibly not having the silver in inventory that they claim to have. Investors are often enticed into these sorts of silver investments due to the low premium compared to other retail silver products and the lack of storage fees. But if your money is just going to sit in some account and real silver isn't being obtained in sufficient amounts to back your account, it's unlikely you'd ever be able to obtain the physical silver if you ever wanted to, or even book the profits if the real silver exposure was never there in the first place due to creative accounting measures or supply line issues being overwhelmed by the new silver investment demand. If enough investors in these type of accounts lose their patience or trust in unallocated accounts and move their money directly into physical silver, it could remove a false source of shadow inventory in the silver market, causing a major revaluation in the silver price as the market realizes the silver supply is actually much lower than previously thought. High silver to gold ratio. The silver to gold ratio is a measurement that is also often followed by investors in the precious metals. To say that the ratio is currently highly favoring gold would be an understatement. Currently, the exchange ratio is around 72 ounces of silver for 1 ounce of gold. This value was as high as 120 ounces of silver for 1 ounce of gold during the March 2020 panic in the markets. Historically, however, silver has had a much closer ratio between itself and gold. Typically, when prices of the precious metals in general rise, the ratio between gold and silver contracts. During the 1980 high in the gold markets, the ratio between gold and silver was as close as 20-1, a number much closer to its historical average it maintained for hundreds of years. Typically, once gold makes an all-time high, like it did in 2020, it's only a matter of time before silver does the same thing. Another factor to consider is that currently for every ounce of gold mined, only about 8 ounces of silver are being mined. It seems like in such a scenario, it would be difficult to maintain such a high ratio between the two metals on a permanent basis. There's never any guarantees, but it seems favorable for this ratio to narrow and for silver investors to see even greater rewards. Declining silver production. In the last few years, silver production has globally peaked and has begun declining for several years. Of course, mine shutdowns due to the pandemic and related concerns did not help production in 2020 either, which also continued the decline. It seems it is becoming increasingly difficult to find new silver to produce. There are very few primary silver mines, meaning mines where most of the metal being produced is silver. Most silver production is a byproduct of other mines coming along in small amounts, with other metals like copper or lead being the primary product. For such reasons, more silver can't just be produced at the drop of a hat. It is primarily being produced at a rate subject to the demand for other metals. Even if you can find a primary silver mine, these projects take years to bring online and into production, and many times they are located in countries that are unfriendly to business interests, where high taxes or the threat of outright nationalization discourages investment. Even if prices rise and demand increases, getting additional silver brought online is more difficult than most people might realize. Lots of room to run. Silver is perhaps the only major commodity to have not set a new high price in the last few decades. Oil, gold, lumber, and most other commodities have seen their prices rise to new highs over the years, while silver has yet to surpass its high price set in 1980. For silver to continue to be the odd man out as the price for other commodities rise seems harder and harder to justify. This leads silver investors to suspect there is more upside to come in silver as it plays catch-up for decades of underperformance against other commodities and investments. If your goal is to actually buy low and sell high, instead of buying high and hoping to sell higher, silver may be the only choice in a market swamped with overvalued investments. Readjustment to historical patterns of investment. Traditional investments like stocks, bonds, and real estate are approaching heights that have never been seen before in their valuations. As these investments continue to rise in price, it's becoming harder and harder to justify the price being paid in hopes that prices will continue rising. Big players within these markets are even saying that they are in a bubble territory, and that it's only a matter of time before these investments come back down to earth and return to more reasonable price levels. As it stands, most national bonds are trading at negative interest rates once inflation is considered, and stocks are at price-to-earning levels that have never been seen before. Traditionally, these sorts of signs would signal a top on the markets. Housing may have also seen its peak as buyers are losing confidence they'll ever be able to afford a home at these sky-high valuations. Currently, only about 0.5% of investment capital is allocated to precious metals. During the 1980 high in gold and silver, the price was closer to 5%. If even a small percentage of investors decide that the other major investment categories are overheating and decide to rotate into the relatively undervalued precious metals markets, we could see an explosion of demand, and as a result, an explosion in price as well. Historic levels of inflation and money printing. Unless you've been living under a rock, you've probably heard of the massive spending programs passed by various governments during the pandemic. You've probably gotten some type of government check during the crisis yourself. And that doesn't count the trillions of dollars assigned to businesses and other stimulus projects that it didn't end up directly in the hands of the average person. Without getting into the political weeds on if you support these programs or not, the fact of the matter is these programs were not paid for through traditional methods of taxation or borrowing currency in the open markets. Central banks created trillions of dollars out of thin air in order to purchase the government debt that was issued to create the money needed for these stimulus programs. This occurred at the same time that the pandemic disrupted production and transportation of many daily necessities like food and other consumer goods. The bottom line is this has created a scenario where more money is chasing smaller supplies of goods and services, creating record levels of price inflation. Traditionally, silver and other precious metals have performed greatly during periods of inflation, and it seems given the current financial situations of most governments around the world, a return to disciplined national budgets is not likely in the near future. Money printing and its related inflation and the resulting rises in price are not going anywhere in the near future. Massive debt loads are being carried by national governments. They simply can't afford to pay a fair market rate for the debts they carry, and central banks need to continually buy more and more of their debt at artificially low interest rates just to keep the current system going. It's anyone's guess how long such an unstable system can be maintained, but historically we've seen people lose faith in their currencies and rush for any items of tangible value once they realize such a scenario is in place. Green energy initiatives. Popular within many political movements within governments today are various green energy initiatives for producing clean energy from sources such as solar panels. Few people realize just how much silver goes into each solar panel, however. One estimate suggests that just to meet the US demand for residential electricity, you would need to consume at least 1 full year of global silver production. Obviously, this couldn't happen since there is so much demand for other products that require silver to produce, like other forms of electronics. Still, the push for cleaner energy and demands for things like electric cars are likely to increase demand for silver as these green movements gain more control within various major governments. Lack of counterparty risk. In these times, it's hard to know who to trust. Banks go under and demand bailouts or seize their depositors' funds in exchange for worthless stock. Brokerages sell off customer orders for profit so trades can be front-run. Trading platforms ban buying entire investment categories like so-called meme stocks, and in some cases even force investors to liquidate their positions. In other cases, firms have even used customer money to back their own bad bets, leaving investors high and dry even if they made the right investments. Basically, the vast majority of investments require you to trust another party, and when that trust is broken, oftentimes there's nothing that can be done about the losses that occur. Precious metals, however, don't require you to trust anyone. Their value is based solely on what they are. And when they're in your own possession, you don't need to worry about a crooked employee making a bad move with your money or a bank seizing your funds. It simply can't happen. Outside of a few technically difficult to pull off efforts at counterfeiting, precious metals are an asset that you can always trust in. For those seeking to diversify their assets, it makes sense to have a portion of your money in an asset that doesn't rely on trusting another potentially nefarious or incompetent party capable of losing everything that you've worked for. Thanks for watching my video. If you liked it, please hit the like button, subscribe for more, and share this video. Thanks, and I'll see you in the next one. Have a great day.